Tesla stock massively outperformed the markets today, and even into after hours is furthermore in the green. This has a lot of people wondering and questioning whether or not Tesla could go through some form of a short squeeze and or a gamma squeeze over the next coming weeks. Now, to be honest, this actually makes a lot of sense. Too much sense to ignore. That's why I'm making this video. Now, don't base your opinions based on this video, but it's a strong sell. I'll just tell you that right from the start. But a lot of this is contingent on the data that we get tomorrow and then followed on Wednesday. Here in this video, we're going to be going over just that. Short squeeze or no short squeeze for Tesla. Tesla is the most shorted stock on our markets and accounts for over 2% of all short positions. So Tesla is very short, and even more now than you were over the summertime. And I think that just adds to the theory on why a short squeeze could actually happen. On top of it, we're going to take a look at the option activity today. How are hedge funds, institutions, and retail traders investing and positioning in Tesla? And then finally, ChatGPT is giving us their own opinion on where Tesla stock is going next. We have all of this and much more for you here in this video. We're not going to waste your time. Let's go ahead and get into it. Let me know what you think on this topic down below in the comment section. While you're down there, hit the like button as well as subscribe to the channel, and let's get started. According to S3 Partners, short sellers are down $52.1 billion in mark-to-market losses since October 27th, down about 6%. And as you can see here, the least profitable short since October 27th, Tesla makes it on the list. But notice, out of all of these big tech names, you have Microsoft, Nvidia, Apple, Amazon, Meta, Palantir, AMD, Visa, Shopify. Tesla is by far the most shorted stock on our markets, with about 17.6 billion worth of short positions. And as you can see from this post from Ior Duinsky, he is the managing partner with S3 Partners. He says Tesla's short interest is, at the time, this was a couple of days ago, November 8th, at 18.63 billion, the world's largest short. Now, consider on November 8th, Tesla was trading at around these same prices, so shorts probably lost about $1 billion today. But let's continue on. He says the world's largest short, 83.84 million shares are currently short, 3.03% short interest of free float. Over the last 30 days, we've seen 242,000 shares shorted, worth 53.7 million, a 0.3% increase in total shares shorted as its stock price fell 14.72%. Shorts are down 1.76 billion in November, mark-to-market losses, and after today, that number is probably even higher. As you can see on Friday, Tesla stock was up 2.22%. Based on Ortex estimates, short sellers lost about $376.4 million on Friday, and today's gain was over double Friday's gain. So you can imagine short sellers are down almost $1 billion today, including the move higher we're seeing in after hours. But I'm sure you guys understand this. Just because Tesla has the largest short position out of any stock in the world, well, that doesn't necessarily mean you're going to see a short squeeze. Tesla has been the most shorted stock on the markets. That is one reason why Tesla is very volatile, right? Hedge funds and institutions, if they're losing or making $1 billion+ on a really good day or really bad day, it's going to make the stock more volatile. But there's a couple big reasons why you actually could see a short squeeze. And I think you actually started to see this play out today. Let's be honest with ourselves. We understand how Wall Street works. We knew this news was coming for Tesla stock. I'm referring to the news today that caused Tesla to rally 4.22% in regular trading, up almost 0.5% here in after hours. This India expansion news, we already knew about this. We knew it was coming at some point soon. Tesla already has an office in India. They did that back in August. We are so far ahead of Wall Street, it is ridiculous. So the data that you know is not priced into Tesla stock today. That's one factor, but not the most important. But probably going to lead to some pretty nice gains in 2024. Really, the biggest reason why I think a short squeeze and or a gamma squeeze, we're going to take a look at the option activity here in just a moment, could actually happen and does make a lot of logical sense. Think about it like this. Why did Moderna or Pfizer or BioNTech do well in 2020, long before they ever had a vaccine? Wall Street was anticipating they would be the ones to come out with a vaccine. It's as simple as that. Wall Street positions for catalyst, for events, for macro events before they ever happen. So we know one thing, and we know one thing for sure. Rates are coming down in 2024. This will benefit Tesla directly. Now, if you are a hedge fund or an institution, think about this logically. If you're a big money investor and you're managing clients' money, well, a lot of them cannot invest in dookie companies, okay? A lot of the time they have to be quality companies. Who's going to benefit from rates coming down that is a very high quality company? There's only one, and it's Tesla. Sure, you can participate and get somewhat involved in small and mid-cap stocks, some hedge funds, but if you want a clear winner of rates coming down in 2024, it's Tesla. And as you know, as we just discussed, Wall Street, they start to position money long before your actual event comes. Meaning, if we're expecting the first rate cut in May, it makes sense why some shorts would cover on short positions now or buy Tesla stock now in anticipation of Tesla benefiting from lower rates. It's pretty straightforward. Now, we actually got some data today, well, that could be making this situation potentially a little more squeezable. There is two major catalysts Wall Street and the Fed care about this week. CPI tomorrow and retail sales on Wednesday. Two most important catalysts. Well, we just got a glimpse of what retail sales might look like. This article came out today. It mostly flew under the radar for a lot of people, but I think it's having a big positive effect on Tesla or quality small cap companies as well. I own some quality small caps like a SoFi, like a Fubo that are very close to profitability, that are going to become profitable in 2024, and those stocks actually did pretty well today. Here is the headline of this article. Consumer spending fell in October, according to new CNBC NRF retail monitor tracking card transactions. October retail sales, excluding autos and gas, fell 0.08%, according to the new CNBC NRF Retail Monitor. The Retail Monitor is a joint product of CNBC and the National Retail Federation based on 9 billion annual credit and debit card transactions collected and aggregated by Affinity Solutions. The October data accounted for more than 500 billion in sales, showed weakness in gas station sales, electronics, appliances, furniture, and home stores. Take a look at the current estimates for retail sales. They sit at a little over 0.5% right now. That's the consensus on Wall Street, excluding auto and gas. Your CNBC survey, well, is much lower than that. So what does this mean? Well, I've been very vocal on this. Slightly bad retail sales could be a good thing. It could say, hey, the Fed definitely doesn't need to raise rates from here. The Fed might actually start lowering rates sooner, and you might get a soft landing. Too bad of retail sales, well, does the same thing. Ultimately means the Fed probably cuts rates sooner, but a recession is a lot more likely. See, you got to remember, Wall Street, the only thing Wall Street cares about more than the Fed and Fed policy is recessions. So a recession is going to cause a lot more fear than if the Fed raises rates, holds rates for 5 years. It doesn't even matter what the Fed does. As long as you don't see a recession, we're good. We're fine. So slightly weak retail sales is good. Really bad retail sales is not good. So this report from CNBC today is more good news for Tesla. It's saying the Fed probably cuts rates a little bit sooner than expectations, and maybe we don't head into a recession. Maybe it's just enough slowdown that we don't head into a recession, but rates go lower. That's ultimately the best case scenario for Tesla. Take a look at your option activity as well today. You had 1,084 orders totaling $1.93 billion with a positive order value of 55%. That's pretty dang good relative to last week's positive order value of 35%. Total call volume out of the total amount of options bought or sold today, 56% were calls and 43.97% were puts. As I went over on Sunday, that price prediction video, hopefully you caught it. I said most likely Tesla stock could actually hit 240 or 250 this week. And we're not fortune tellers here, but a lot of this did come down to some of the option activity that we were seeing around the 250 call by December 15th. You're seeing a lot of activity around that 250 call. Now, even for this week, the 230 call today alone had almost 130,000 for volume versus 28,000 for open interest. The 220 call had 93,000 for volume today versus open interest of 28,000. The 240 call had volume of 37,000 versus open interest of 24,000. If you take a deeper look at this week's option chain, the 225 call has 18,000 for open interest. That would be about 1.8 million shares that market makers would have to buy if Tesla stock does break above 225. At the 230 call, you have 28,000 for open interest. That would be 2.84 million shares market makers would have to buy. The 235 call, you have about 16,600 for open interest. That is 1.66 million shares market makers would have to buy. At the 240 call, you have about 24,000 for open interest. That's 2.4 million shares. And the big one for this week, the 250 call, has 30,000 for open interest. That would be about 3 million shares the market makers would have to buy. So it's not just a high short position you have a lot of people bullish in Tesla options as well. And that could work hand in hand with a potential short squeeze and give you a gamma squeeze. Now, one of the biggest reasons why I think this is actually a possibility is because Tesla stock is trading at $224. In all reality, there's not a lot of good things priced in for 2024 for Tesla. And it seems like today, Wall Street woke up and opened the window and seen the sunshine today and realized, hey, Tesla's going to have a lot more going for it in 2024 than working against it in 2024. And I just think, not even in the short term, but in the next 3, 6, 9, 12 months, there's going to be a lot of catalysts that happen for Tesla that are not even remotely priced into Tesla stock. If you think there's a remote chance that we have a licensing deal for FSD, if you think there is a remote chance that more companies sign up for the supercharger network, or we do get better earnings than expectations, or if rates fall more than expectations, there's so many different things that could happen. The Cybertruck is successful. Margins improve. Tesla raises prices. Imagine that. Wall Street, it doesn't even have that on its radar. Not even the most bullish analysts for Tesla expect them to raise prices in 2024. I'll tell you right now, rates come down, Tesla's raising prices. Simple as that. So just besides the short term, a potential short squeeze and or gamma squeeze, the next 3, 6, 9, 12 months look exceptionally good for Tesla. But here is the caveat. If inflation comes out tomorrow morning hotter than expectations, yeah, you could probably kiss the rally goodbye, because that would work to the contrary of everything we've said in this video. If CPI comes in hotter than expectations, we've already seen inflation expectations rising, that's going to put a stronger likelihood on getting rate cuts. Really, that could mean you would need to see a really bad retail sales on Wednesday to get the Fed to kind of back off on the hawkish verbiage. Now, your inflation expectations, official estimates, 0.3% month over month for your core. Last month was 0.3% as well. Core year over year is expected in between 4 and 4.1%. Last month, you were at 4.1%. Month over month headline is expected at 0.1%. Last month was 0.4%. A lot of headline, as you know, is really driven by gas, by energy prices. So that obviously fell towards the end of October. So that should be the thing that's really offsetting that there. The details will be important as well. I should point out, if you obviously seen a drop in services or other things as well, that will also be very important. So you're really going to want to look into the report itself. And if you guys are subscribed to the channel, we will get that for you. Hopefully before 4 p.m. tomorrow, maybe around noon or so, we'll try to get that video out. Now, your inflation rate year over year is expected at 3.3%. Last month, you were at 3.7%. So it's really your core that's expected to come in the same as last month and really not see any progress. I personally think core's probably going to come in at 0.2% month over month and around 3.9% year over year. That would be your Goldilocks scenario where inflation is falling, the Fed doesn't need to raise rates again. Now, retail sales, on the other hand, if that comes in as the data suggests it could from CNBC, then you're really in a Goldilocks scenario. The expectation currently is about 0% for retail sales. That's fine. As long as you're not super high. Last month, you were at 0.7% month over month. If you come in at 0.1%, 0.2% month over month, that's fine. If you come in at like 0.5%, that's a problem. If you come in negative 0.1%, that's great. 0.2, 0.3, that's fine. If you come in at negative half of 1%, negative 1%, then you might be in for a little more of those recession fears. Tesla stock today is currently trading at $224.57 here in after hours. That's a couple dollars higher than your 200-day moving average, which is at $221.10. A lot of people are starting to turn a little bit more bullish on Tesla stock following this break of the 200-day moving average. And rightfully so. A lot of algorithms, a lot of trading programs or big money trades around the 200-day moving average. If you can see a move higher, especially tomorrow, that's going to set you up for a pretty clear gap fill back to about 240. Anything higher than that, I think you really start to get into a squeeze, and that could potentially take you even much higher. Now, if you look at the broad markets here, we've talked about this before many times now. You are seeing a cup and handle formation. This is a very bullish, probably the most bullish pattern for stocks you could ever have. It's a cup and handle. It's a cup, handle. Once you break that upside, you can easily make your way to new all-time highs from here. If the CPI report comes in not as hot as expectations tomorrow, if retail sales come in around expectations, let's be honest, as long as they don't come in really high, stocks could go higher from here, just in general, let alone Tesla seeing this good news today and being a big beneficiary to lower rates. That could also help push Tesla stock higher. And Tesla has fallen a lot more than the markets recently. The markets have basically went straight up, and Tesla stock has kind of went straight down in the same time frame. So Tesla might even have some catching up to do to the upside. I don't personally know how high Tesla will go. Like I said on Sunday, last night, you could see Tesla 240, 250 by the end of this week. Could we make our way to the 300s? I actually think that's possible. Just simply put, Tesla's going to benefit a lot in 2024. There's a lot of good things going for Tesla in 2024. I don't know how much of Wall Street is going to actually position for that now, or if it's the wait and see approach, what happens with rates or whatnot. But I think it's clear there is a good reason to buy Tesla stock at 224. I mean, back in July, you were at 300. That's a pretty nice gain for your average, hedge fund, right? That could be a gain of over 30% from current levels. If you're looking out to 2024, the only thing you can say that is really negative is, what if we go into a recession? And that's where, if you get a Goldilocks data report tomorrow with CPI and then with retail sales, I think a lot of those fears short term are going to be relieved. We just got through big tech earnings. We don't have Nvidia this week. I believe that is next week. That's going to be another decently large catalyst for our markets. But you really don't have anything else. You get retail sales, CPI out the way. You just had the Fed. You just had big tech earnings. Now we just look ahead for 2024. And this time of the year, as Charles Gasparino says, this is very much because November is the best month of the year for stocks and December is the second best month of any given year for stocks. And this is really because people position out for the next year. People tend to be bullish and optimistic. You also get a lot of spending around this time of the year. The Santa Claus rally, we'll talk about it more when we get down to that moment of time, but tends to be the last 2 weeks of December and the first week or so of January, the new year. You tend to get a pretty good market rally. So it could just be, well, Tesla's time for a short squeeze. ChatGPT is predicting Tesla's stock price for the start of 2024. Finbold decided to consult OpenAI's flagship tool ChatGPT and see where it thinks Tesla stock will stand on January 1st. According to ChatGPT, Tesla is likely to stand somewhere between 180 and 280 on January 1st, 2024. Considering that is a rather wide range, the artificial intelligence AI also laid out 3 possible scenarios and offered tighter estimates for each of them. The low estimate is 180 to 200. The reasoning is the recent decline in the last 5 days and the last month, coupled with concerns about the overall slowdown in the EV market and the initiation of an EV price war, might contribute to a more conservative estimate. Investors may react to short-term challenges and uncertainties by being cautious, leading to a lower price range. The midpoint estimate is 210 to 230. The reasoning is this range considers the potential for short-term volatility, but also acknowledges Tesla's positive performance over the last 6 months and year to date. The historical growth of Tesla, combined with the introduction of a new, more affordable model in 2024, could support a more stable midpoint estimate. It reflects a balanced view of both positive and negative factors. And the high estimate is between 240 and 260. The reasoning? Despite recent declines, the overall positive trajectory over the past 6 months and year to date, as well as Tesla's robust long-term growth, may lead to a more optimistic high estimate. The anticipation of a new model and Tesla's ability to adapt to market challenges could install confidence among investors, supporting a higher price range. I do think the high estimate is the most reasonable estimate, but I would also add in there again, lower rates in 2024, Wall Street positioning for that now, as they always do. Wall Street will always position months ahead of a positive catalyst. Not necessarily a negative catalyst, but positive catalyst, and just overall macro shifts like lower rates. Wall Street very firmly positions beforehand. So I would say that's a big factor as well that could send Tesla stock even higher than the high-end estimates. So let me know what you think of all of this information. Hit the like button and subscribe to the channel on your way out of this video. If you guys would like to come join us in the trading community, link down below in the description of this video. My name is Michael Tyler. Enjoy the rest of your day, and I will see you in the next one.